Hello traders and welcome to another video review. Today is Tuesday, February 15th, 2022. Let's take a look at the Forex calendar. We got the monetary policy meeting minutes from Australia released 1:30 overnight, and gross domestic product at 1 a.m. As you can see, the gross domestic product increased from minus 0.7 to 1.3% on a quarter-to-quarter basis, but it still was then forecast of 1.3%. So we will definitely take a look at the Japanese yen and Australian dollar today. Climate cow change, climate count rate, and average earning index are data published from the GDP. As you can see, we got a mixed bag of data from the from the United Kingdom. We are still waiting for the data from Germany and, of course, Eurozone. Economic sentiment, current situation, and survey from the Germany are scheduled for release at 11 o'clock. At the same time, we got the GDP, employment change, and current account of the Euro zone. During the New York session, we have a PPI data and core PPI data from the US scheduled for release 2:30, and then we got some minor data in form of the Empire State Manufacturing Index and TICS from the US as well. So today we should definitely take a look at the Australian dollar, the Japanese yen, pound, and maybe we should take a look as well at the euro dollar. So let's start with the Australian dollar. The Australian dollar daily time frame chart is showing us weakness after the rejection of 7,252. We got this big pin bar here. I think I could move my blue arrow a little bit lower, so we have the lower high, right? We got the lower high, we have the breakout of the short-term trend line, and for now we got inside bar forming on a daily time frame chart. However, the market is still following our scenario, down scenario, towards the lows of the end of the January, seen at 6,968. So right now we are heading towards 7,053 pips technical support. If we break below this level, then the lows are still possible to hit. Momentum is weak, momentum is negative, and during this rally here, the momentum just barely moved above the level of 50 on the RSI, which means the market is still under the control of bears. Let's take a look at the US dollar to the Japanese yen now. US dollar to Japanese yen daily time frame chart is showing us very interesting situation. On the one hand, we got this market that is bouncing from this trend line here, right? We've bounced here, we've bounced here, we've bounced again, we bounced again, but still 116.37 has been rejected twice. We got the rejection here, correction, and we got this bearish engulfing pattern here, clear rejection of this level, and of course the pullback just below 115.53, now technical resistance, and we got still the technical support at 114.74. Let me just change the color to green. This is the support now, and 114.25. This is the technical support as well. So right now, what do we have here is market that is waiting to rally above 116.37. However, it's not that strong to do this yet. But on the other hand, if we break back below the short-term trend line, okay, below especially 114.29, then this might be a pattern for a double top, and a daily time frame chart will move lower towards the price on a daily time frame chart, of course, will move lower towards 113.50, which is that level. As you can see, I have my candle here. Let me just put another candle. This is the level we should keep an eye on, and this is the level we should keep an eye on as well. So that's the three levels definitely traders should keep an eye on, because those are the most important levels. The uptrend is still intact, at least this short-term uptrend. However, the bulls having problem with 116.37 tells us something about the strength of this up move. Might be doing some sort of a ending diagonal, so please keep an eye on the US dollar to Japanese yen as well. We should take a look a little bit at the British pound and Japanese yen. To connect both British pound and Japanese yen, let's take a look at this situation here. This market is following our path perfectly. Wave A high made at 156.63, wave B low made at 152.88, and now we are developing wave C. If the wave C will stop here at 61% of the projection at 158.30, we almost hit this level, 26 pips miss. That's nothing wrong with this pattern. However, more technical pattern is of course 100% projection of wave A measured from the low of the wave B, which is located at 161.65. So there is still plenty of room for the wave C to cover. However, as we can see, for now we are waiting for a definitely much more stronger breakout of the top of the wave A, 157.74, and the top of the previous high, 158.18. If we break above this level with a daily candle close away from this level, nice beautiful breakout, then we can almost surely say that the level of 161.65 is in view for the bulls. Momentum stays positive, momentum stays not that strong, but still this is a positive momentum. So market is being controlled by, of course, bulls. So that's nothing that changed. Let's just put my parallel channel around here to see if that would work. There you go. Somewhere here we can have wave C top. So far so good, we're going up. Let's change this ABC to green. We can't see anything. Green, there you go. And right now this is very nice pattern to follow on British pound to Japanese yen. And we should take a look at the euro as well. So let's take a look at the euro to Japanese yen. Euro to Japanese yen, clear rejection of the level of 133.13. So this level has been rejected. Big bearish engulfing pattern into extremely overbought market conditions. Classic rejection pattern. Very deep retracement towards 130.75. We even broke below this level, which is why 131.59 is now technical resistance, and unfortunately 130.75 is technical resistance as well. So for now, what do we have here? What's the situation? Technical support, the key technical support 127.35. We still have the 128.27 technical support, but please be very careful trading this kind of levels, because they are very close of main technical supports and can be easily broken. 61% retraced from the last high, 130.12. This is the 61% of the last push of the wave up. And moreover, what can I say is that we got ABC pattern completed here. Where is my ABC? There you go. Let's say this is the wave A, this is the wave B, and this is the wave C. So right now ABC pattern completed. High of the wave A broken, so it cannot be anything else. the market is ready to go lower. The market is ready to go lower. Please keep an eye on 61% of the Fibonacci retracement. And last but not least, let's take a look at some crypto in form of Bitcoin. What is Bitcoin doing? And what I can see here is the another attempt of bulls to rally above the level of 61% of the Fibonacci retracement, which is very important level for bulls right now. We are now making very nice green candle approaching the supply zone, rejected twice already. Any big candle like this or like this, any kind of a movement closing above 45,429 is a bullish development for the Bitcoin. Bears are in retreat, and that would mean next target is 51,146. That scenario is valid as long as 41,188 is not violated and 39,440 is not hit as well. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.